Basics of support and resistance. Why is that important to us? It's important to us because that gives us a very good indication of where the orders are going to be sitting. I don't believe CNBC either. We got one thing in common there, Alvin. It's very important because it gives us the indication of, again, where are the orders going to be sitting. So there's a reason why on any given day we can peg the high probability manipulation point pretty accurately. When we're wrong, generally the market shows no response to that level and we get a no trade situation. And we'll walk through that as well. So as we look at this day here, why, and just as a note to be fair, for me this would have been I'm not going to really get into all that explanation. I'm just going to break down the basics here. Sometimes I get caught up trying to explain all the little nuances, and when really, like Jersey said, that 3-part video series, that first video there, guys, and is the first part to a 3-part series. We have many traders who failed for years or who are new to the market, who do very well, who are members and who are not members. It doesn't really matter. A lot of the information is on the front end of the site. One of the things you'll notice real quick before we get back into what we're talking about is that there's no fluff information on the front end of day trading Forex Live. If it's not useful, it's not there. That's the bottom line. And just like he said, I've seen it change people's trading and change it dramatically. So I would just urge you to, after the seminar, go through all 3 of those videos. That's a very good basic overview of everything in those videos. So anyways, moving on to this, we had the direction expected for the day. Why did we have that direction expected? Well, because it was in the direction of the current market cycle. So the second question we have to ask ourselves, where are the orders sitting? Because we know the banks need sellers when they want to buy, and because we know the banks need buyers when they want to sell, we know with a high degree of certainty that if they're going to drive the market down as we expected, then what they're going to do is they're going to come up and induce buying pressure and then sell into that buying pressure. So that goes back to the same point of why it was so critical when we talked about general support and resistance. A very simple fact that almost every single trader is looking at. Trading institutions, hedge funds, all the major news agencies, I don't care who it is, they're looking at it. So when we look at this from the perspective of what are the banks going to be doing, why would they drive it above a high before ultimately driving the price back to the downside? Because very simply, that's where the orders are. So when we discuss where the high probability points are, the first thing we're going to look at, the very first thing, and without this, that level means nothing to me, unless it was a very clear level that the market has responded to in the past, then I do not expect orders to be sitting there. So what that means is that because support and resistance is so prevalent, because all retail traders look at it, if there is not a level that has had response to it in the past, for example, this high, then I don't look at that level as a high probability point. Well, I'm not familiar with Craig Harris, but we have I'm sure a lot of the members could probably, we have a lot of Steve's members. I'm sure they could speak to how we're different. The big thing I would say is the fact that they can actually they find success when they start to learn from us. So I have nothing against any of them, or what's the name of the guy I'm thinking of? What I always say is that if you're not, and this goes to your question, if you're not going to learn from us, what I always say is learn from somebody that teaches market manipulation. So if you're not going to learn from us, learn from Steve. I have nothing against that. What my job is to get you to look. Yeah, there you go, Martin Cole. My job is to get you to stop looking at all the crap everybody else teaches. It has failed people for years, and people still look at it. So my job isn't to have you learn from me. My job is to get you to learn from at least somebody that teaches market manipulation. Now, do I believe that what we offer is the best? Well, of course I do. What else would you expect me to say? But my job is to get you to learn from, one thing I can say is, Martin's a good guy. I've talked to him before. I don't really 100%, I think there's easier ways to do what he does. But I know the guy is solid, and I believe in him. And, I can't really speak to Steve, but I've heard a lot of good things about him as well. So my job is to get you just to stop looking at the mainstream stuff. Whether you learn from us or you learn from somebody else really doesn't matter to me, as long as I can break the trance that people are in. So as long as I can do that, then that's the key for me. It's just important to really get back down to the basics and to understand what the banks are doing, and that's really the entire goal here. Looking back at this perspective and trying to get down to the foundation of why this manipulation is so straightforward and is possible to track is because retail traders are predictable. So the reason the banks are predictable is because retail traders are predictable. So if you're looking from a short-term trader's perspective, and let's just take for example that let's just assume that the end of this gray box here. I'll let the mouse catch up. So the end of this gray box here, let's just assume that the price has not gone past that. So let's just disregard that for a while. Disregard the the market coming up near those highs for a while. So looking at it from the perspective of where would the orders be sitting on a retail trader's perspective, if you look at it from a retail trader's perspective, the most common way to trail a stop is to trail a stop beyond the last high. So there's a reason why once we saw the push above that, the rejection back down below, there's a reason why many people were jumping on that trade. Now, there's other things to this trade, but the bottom line is there's a reason why they're predictable. And once we have market cycle, we can go back and within that day, we can go back and we can look at those high probability points and move on from there, and know which points the banks are going to run into. Let me go and look at, let's see here. I want to go back and I just want to illustrate a quick point, guys. I'm looking at an hourly chart, and I'm just going to, I had picked this time just because this is where I was at when I was looking back. Okay, so, and I'm just going to illustrate a basic point here. When you look at it from an hourly perspective, and this should really kind of to hammer some base before this move started to the downside here, as you look at this move down here. So as the question we got to ask is, why does the market break above the high before starting its move to the downside? As we scroll forward, at the end of this entire trend to the downside, why does the market make a false push below the lows before getting rejected back up? As you continue forward, move this down. Why do you see the market break above the highs again before getting rejected back to the downside? Same thing here. We'll let the market, as we look at it here again, why does it break above the highs before getting rejected back down? And you could go through this all day long and scroll forward, and what you're going to see, and this is the same thing. This is a again, I got to let the screen catch up to what I'm saying here. Why do we see the market break above the highs before the immediate rejection to the downside? The basic principle of understanding the stop run, and I'm going to go back to the current price, by the way, but the basic principle of understanding where retail orders are sitting and then waiting for the manipulation at those locations is something that gives us a huge edge in the market. So when we combine that with market cycle, what we have is we have a very good overview of more than likely not only the expected direction for the day, but also the high probability manipulation points where we expect to see the bank manipulation. Now, in general, what is manipulation? As just a quick overview, manipulation very simply is seen when the market breaks above the point we expect and then very quickly gets rejected back down below it. So there's a reason why a lot of members took this trade, because it broke above the highs, was rejected back down below, and showed a solid stop run of that overall high. It's the same reason that as we scroll forward on the pound, the deeper manipulation level that we were looking for on the pound. So as we look at the chart, we had seen a first push to the upside, and the second deeper manipulation level we had was 6,100. It was 6,100 for a few reasons. We had a lot of confluence there. It was a psychological barrier of 6,100. Retail traders, how many people understand or know of psychological barriers? I'm guessing out of the 170 people in this room, I'm guessing probably 150 or more understand that orders sit in and around psychological barriers. When you look at the most common EAs that are used, or excuse me, the most common moving averages that are used, the 200 EMA is probably one of the most common moving averages used. You put that in combination with the fact that that level has had a response to it in the past, and all the points of confluence together represent an area we should be looking for manipulation. So do we know for a certainty that they're going to create the manipulation at that level? No, we don't. What we do is we wait for the market to get into that point, show us the stop run at that level as we had here, and give us a valid reason to take that entry. So there's many fail-safes built into the strategy. It's number one, we start with market cycle. Number two, we pick our high probability points. And then number three, we let the market come into those high probability points, show us the manipulation. Once we see the manipulation at the high probability points that we've already pre-selected, that's when we take a valid trade. This is something that doesn't take forever to learn. There is a massive amount of information on the front end of the site. I would urge you guys to, at the end of the seminar, I would urge you to watch, again, this link, and that is the first video in a 3-part series. At the end of that video, on that same page, right below the video, it says watch the next training video in the series, and it goes to part 2. So again, after the seminar, I would urge you to go watch that video and watch the other 2 that are associated with it. It will break down the strategy to its base through those 3, videos. This block right here, so this block, this tall, skinny block that you see each day, is the 8 to 11 a.m. block. So that's the time we look to trade during the New York session, 8 to 11 Eastern. If you don't know what Eastern time is to your time zone, go to Google and type in world clock. Look what time it is in New York, and then you can figure it out in relation to your time. So we look to trade during this tall, skinny gray block, which is the New York session, the 8 to 11 a.m. time. And then we look to trade the first 3 hours after the first 3 hours of the European and London Open, so from 2 to 5 a.m. Again, I can write that in. Now, why do we look to do that? Why do we look to trade during those times? No, those are links that go to the front end of the site. Those are not member links. That's free information that's on the front end of the site. So why do we look to trade during those times? It's important to understand that one of the bank's main jobs is to process what we term as general order flow. General order flow is the process of orders for the processing of orders for general worldwide commerce. So if somebody's in the UK and they trade their product to somebody, or they sell their product in the US, they're going to get back US dollars. Therefore, in order to buy whatever they desire, they need to exchange those dollars back into pounds. Or if they need to go buy some supplies from Australia, they need to change those dollars into Australian dollars. That's what we term as general order flow. So looking at it from that perspective at the beginning, looking at it from the perspective of general order flow, why is that critical? Well, it's critical because looking at it from that perspective of general order flow, during that time is typically when those orders are processed. So let's look at it from the perspective of, let's just say we're Citibank and we process orders for a certain amount of clients, and on any given day, they're going to either be asking us to exchange dollars into pounds or pounds into dollars. So those are orders that we need, that the bank needs to process. Now, generally, these orders are processed at the beginning of a session. That's often why at the beginning of the session, at the beginning of any sessions, when you have the most volatile times, and typically when you have the highest probability of seeing market manipulation. So looking at it from, again, that perspective, that general order flow is used by the banks to manipulate the market. And because general order flow is processed at the beginning of sessions, that's why we look to trade the beginning of sessions. So for example, if they're going to look to sell them, or if they're going to look to buy the market, there's a reason why at the beginning of the session they'll push through all their sell orders, drive the market, as we had here in this case, beyond a low, and buy into the selling pressure. Much of what we do here, and I'm sure that a lot of people, they hear it one time and it doesn't make sense right off the bat, and that is extremely common. I can assure you that, if you go through just what's on the front end of the site, you'll have a very good understanding of what it is that we do here. You'll at least have the very good basic understanding. That way you can start spotting this manipulation. You can, even if you're going to continue to use whatever strategy it is that you use, you're going to start to look out for this manipulation during those high probability times, which is, again, 2 to 5, 8 to 11 a.m. Eastern. During those times, at the very least, hopefully you'll watch for that manipulation in and around what we term as high probability points. And video 2 in that series covers more specifically high probability points. Market news, especially nowadays, is used to create manipulation more than anything else. There's a reason why with a lot of market data, you'll see it spike beyond a high. In other words, you'll see the news used to spike it beyond a high or a low, and then they'll reverse the price from there. So in other words, they use the lack of liquidity and the drying up of orders to spike the market beyond a higher low and turn the market from there. This big Asian block, just for one final time on the block here, guys, or on the times on the chart. This block ends at 2 a.m. and therefore the time in between these two blocks is 2 a.m. to 8 a.m. The New York block is from 8 to 11. When a trade sets up, yeah, we will call it call a trade. That's not the purpose of the room. One of the things that, just as a general, what we're going to do now, guys, we're going to get into some questions. If you guys have questions, we're going to get into that. One of the things that is in relation to your question there about the Day Trading Forex Live itself, the original first 2 years of the service were strictly a live room, and we just called trades live in that room. One of the things that I've found out over the years is that traders don't learn in a live room. It's our goal, Chad and I's goal, when we talk to people in a webinar, when we put information on the site, or for our members, our main goal is to get them to trade profitably on their own. Unfortunately, it tends to create traders who become reliant on Chad or I. So although they'd watch us trade profitably live and they'd watch all of our trades live, they weren't able to do it on their own. And when we started giving people in the daily market reviews, we started giving them the exact trade plan for the day, meaning we'd tell them in the daily market reviews, we tell them essentially a signal for the day, the direction as well as the points to look for the manipulation. They're the ones that at the end of the day have to still pull the trigger. So we found it really helped to kind of take a little more hands off and allow them to take the trades on their own. What I would ask you to do, as far as your question there, what types of candle formations we look for to know the manipulation, the principle, the basic principle in the case of market manipulation of a point to the low side is we want to see it break below the manipulation level that we're looking for, and then very quickly get rejected back up above. The video that breaks all that down is the third video in that series, and again, I'll share that link again at the end of the session if you guys don't have that. All right, guys. Do we have any general questions as to what it is we do? I know that, and obviously you guys understand within an hour and a half we can't break down everything, but hopefully we've at least shared the general overview. If there's something about that overview that you don't understand, what we wanted to do in this seminar was go over the very basic foundation of why it is we believe what we believe. So we wanted to break down that the brokers are telling you that they would never teach you anything profitable. So then what we wanted people to do is we wanted them to go look at actually what the brokers are teaching, and then that will give you a list of everything that's not profitable, because they've just already told you that we need to watch out for essentially anything they say, because they take the counterparty trade to what they are the counterparty to your trade. So that's an extremely important point. And we want to break the myth about the fact that the Forex market is not manipulated, because the manipulation is actually the single biggest thing that we're going to look for to give us the single biggest thing that we're going to look for to give us an indication of what the banks are doing for that day. Guys, just really quickly, what I wanted to do before we get into these questions here real quick, what I'm going to do is I'm going to go ahead and let me go over this real quick, guys. Just real quick, I'm going to put in the announcements. There is one of our members has been, really cool to open himself up to people that have interest in learning to trade what the banks do. And Robin has been a member for a while, and he's really helped a lot of members and non-members have an understanding of exactly what it is we do, and whether or not, there are any questions that you may have on it. So what he's agreed to do, which I thought was pretty cool, is he's agreed to take any questions from anybody that has questions, as in regards to what it is that we do, or in regards to the service that we offer. And so let me type this in here. What he's done is he's got essentially a phone number and a Skype, and you guys, if you have any questions, you're more than welcome to shoot him an email or a phone. So let me write this in here. Actually, Robin, are you around? Would you mind writing that in again? I can't for some reason get it to write in. You could write it in the announcements. And that way I can start going through questions. Okay. All right, guys, let me pause with the questions for a minute. I'm going to scroll up and I'm going to start asking questions. If I missed your question, understand there's a lot of them. And we'll try and get to as many as possible here. Question was, so we would trade about 3 times a week depending on bank trading cycle. No, not necessarily. It depends on the sessions you trade and how, if you trade both sessions, if the cycles are clear and if the manipulation's there, we can get more trades than that or we can have fewer trades than that. It really just depends. And, you got to take into account if we've seen 3 cycles down, it's possible they're going to reverse the market all within that 1 week and continue to reverse the price in the opposite direction. So not necessarily, it's not necessarily we'd only have a certain set of trades that week. Jersey, one of the things your question was also what makes the second push a close above the high of the first. The best thing that you can do to get an answer to that question is watch that first video. I believe, actually I'm not sure if you remember or not. Name sounds familiar. So if you're not, the first video that I posted a while ago, that will answer it quite a bit more. It just would answer it a lot better. So cool. Thanks for posting that, Robin. And again, Robin, I'm glad Robin, we kind of twisted his arm to get him to do it, but he he's been a member for a while, and it gives a little bit different perspective. Sometimes because I repeat this so many times, sometimes I don't always explain it. There's certain little nuances that somebody who's been in your situation, who has then learned the strategy, can answer things from a little bit better perspective than I can. And that's what's really cool about Robin being willing to answer any of your guys' questions. So if you have any, feel free. He put his email and phone in the announcements. When it comes to market cycle, your question is the daily chart. It might say is it possible that we're in the second level. What's important to understand, guys, is that when we look at market cycle, we look from the hourly chart. Now, the hourly chart is going to give us market perspective, and in that video, it's going to break down all the little different nuances to what is a cycle, what makes up a cycle, how do you determine cycle, how do you determine what cycle you're in. The second video is going to break down how we determine high probability manipulation points. The third video is going to break down what do we do once the market gets to those points. And those 3 videos are going to give a basic overview of essentially what it is we do. The manipulation, very simply, there's a reason why all moves, almost all moves will start. I don't want to say all moves, obviously, because that's not the way it is. Most moves will start, if they're going to run the market down, and this is a very simplistic overview. Understand that this is not a basic, or this is, as we look at this and we see, in this example, there's a reason why the market broke above that previous high, and that's where the market started to work down from. So how it manifests itself on the screen, Andy, is you will see the break above the major level, and again, it's important to pick the proper high probability points. So when we come into a proper high probability point, we see the market break above it and then quickly get rejected back down below. That has given us a very good indication that the stops were taken above that point. It's the same way as we go when we scroll forward. The second or deeper high probability point we had talked about for Friday. So the second point that we were talking about in the daily market review was 1.6100. Now, why did we mention 1.6100? Well, it was a point of confluence. I'm not going to get into every part to that, but that was the high probability point we marked. So when the market comes into that level and we see them break below that and very quickly get rejected back up above it, that gives us a good indication that stops were taken. So there's one thing that we know. If they are, you got to ask yourself, what type of order is below any support point? You have really, while there's many types of orders, in general, you have two main types of orders. In this case, you're going to have the stop loss for anybody that's long. And the second type of order is you're going to have those that are looking to sell on the break of that level. Therefore, that's telling you that below any support point, you have a massing of sell orders. So if you see them run into those sell orders and immediately buy up all those sell orders, quickly get rejected back up above it, that's giving you a very good indication that they were buying into the selling pressure. If they were buying into the selling pressure, then that gives you the direction. That's telling you that they are looking to accumulate that long position. It's just the exact opposite for what we
Yeah.